Every country in the world has debt. The United States currently carries over $37.6 trillion, and it has never had debt this high in its history. The European Union owes about $15.05 trillion, and Japan almost $9 trillion. Even oil-rich Saudi Arabia, or giant export countries like Germany and China, are trying to live with huge debts. But here's the strange part. If everyone has debt, who is receiving this money? This is where the logic of the system starts to confuse us. Debt is not just a burden, it's like the invisible body of the developed world. Every war, every crisis, every economic collapse has these debt mechanisms underneath. And if you follow the circle of creditors, something interesting appears. The world is actually indebted to itself. But of course, this doesn't mean everyone benefits equally. To understand this, we need to go a bit back in time. The idea of national debt was born not with credit cards or bank transfers, but in wars. In 1694, while England was at war with France, it was running out of gold. The king turned to merchants and said, "Here we go," promising them constant interest payments supported by future taxes, and they financed the kingdom. With this move, the Bank of England was founded. That meant the state could spend money even when it didn't have any. And what did the lenders get in return? A promise from the state. A promise that could be bought, sold, traded. This is how the government bond was born, the foundation of the modern financial system. France copied this, Holland improved it even more, and the United States used it to finance its growth and expand westward. Interestingly, back then, debt was not a sign of failure, but of confidence. Being able to borrow meant being able to govern. In the past, empires conquered land for gold. Now they issue bonds for interest. The battlefield has become finance. 3 centuries later, debt has become the world's biggest export. The US owes $37.6 trillion, Japan $9 trillion, and global debt increases by $1 trillion every 100 days. So who buys these debts? Here's the interesting part. Half of US debt belongs to American investors, banks, pension funds, insurance companies. A third of it is in other countries. Japan and China are the biggest holders. So people say, the US owes China, but actually only about 2% of all US debt belongs to China. Everything else circulates within America. Bonds are issued, banks buy them, new dollars are printed. The interest paid through taxes goes back into American retirement accounts, like a circular mirror. And this is not unique to the US. Japan lends to the US through treasury bills, the US lends to Europe through the IMF, Europe lends to developing countries, and they deposit their reserves into emerging economies. A universal game of hot potato, except there is no potato. There are promises instead. Everyone holds someone else's IOU. And the only rule that keeps the game alive is, nobody stands up. But the real power belongs to the markets. Behind government bonds are funds, pension funds, sovereign wealth funds, and central banks. They decide which country will borrow cheaply and which will pay a premium. If they lose confidence, currencies collapse, governments fall, economies are rebuilt overnight. Central banks are like the high teachers of this system. When they buy bonds, they create new money. One person's balance sheet burden becomes another person's asset. Every dollar in circulation represents a unit of debt. Without debt, there is no money. Every coin, every banknote, every digital dollar carries an invisible IOU. But what if their credibility breaks? Remember Greece in 2010? Bondholders panicked. Interest rates skyrocketed. The IMF and the European Central Bank stepped in, but in return came austerity. Taxes, cuts, unemployment. An entire generation paid the price. You can think of Argentina, Sri Lanka as well. When the system collapses, the creditors become visible. The IMF, bondholders, rating agencies. But in the 21st century, debt is not meant to be paid off. It's meant to constantly change. Governments don't aim to close their debt. They issue new bonds to pay off old ones. This is called refinancing. Interest is the real profit. The global economy depends on this. The US will not pay off its debt. It will constantly refinance it. Japan has been doing this for many years, but bond yields are still close to zero. Investors expect not repayment, but renewal. Why? Because government bonds are the safest investment. If Washington paid off its debt in one day, banks and funds would lose their safest assets, the dollar supply would shrink, and the economy would collapse. That's why governments rhythmically issue more bonds. Debt flows through every pension fund, every mortgage, every market. It's the bloodstream of capitalism. When politicians talk about fixing the budget, they are selling you a story. The goal is not to eliminate debt, but to maintain it and keep it reliable. If trust disappears, interest rates explode and the system collapses. In the end, debt is no longer just a national issue. It's a universal network, a transfer between classes. Debtors are not victims. Creditors are not villains. They keep the system stable together. But if the system stops working, then the true face of debt appears, a debt spiral that can never be fully paid. If this gave you a new perspective, subscribe. The answers lie in history, and I'll tell you where and when to look.